What's up, everybody? It's your boy Red Tape, back at you with another video. What if I told you that the reason you weren't having as much success as you possibly could in trading was due to the time frame that you trade? Many people come into the trading industry and they say, I would like to be a day trader. Cool. It's not very hard. It's not impossible. Takes a little time to learn the skills, but once you grasp that, you can make a nice amount of money in a short time span. People like to come into the industry, they get on YouTube, they go read different books about trading, and they say, okay, I'm going to be a day trader. And you know what? I'm going to be a scalper at that. Well, they say 90% of day traders lose their money. And I used to ask, why is that? Many people didn't give an answer to it. They would just say 90% of people lose their money day trading. One thing that I figured out diving into it is many people who day trade would like to trade the smaller time frames, the 30-second, the 1 minute, the 3 minute, the 5 minute. Some people even trade the 15 minute, which is a little higher and smoother, but still it's a lower time frame. No matter what time frame you're on, whether it's the 1 minute, the 5 minute, the 30, the hour, the 4 hour, the daily, price will always be the same no matter what chart you're on. What changes when you go to these different time frames is you have more candlesticks. And most people who are new to trading, some people that are even seasoned, they trade candlesticks and don't pay enough attention to price. Price action is king in the stock market, especially when day trading. I trade futures, NQ, which is the New York Stock Exchange, the NASDAQ, or I trade gold. Price fluctuates between certain points called support and resistance. Okay, when you go to these lower time frames, you have a lot more candles like you can see here. This is a New York session from here to here. As you can see, my system, the red tape trading system, has given you a lot of different alerts throughout the day to take, which most of these alerts are pretty good alerts, except for some that the system will tell you do not take these trades when the red tape logic box is not in full agreement. Okay, getting past that, you see you have so many different alerts. This is the 5 minute. Now let's go up to, let's say, the 30 minute. Okay, now we're looking at the 30-minute time frame, and you can see from the time New York opened up, which is this candle here, 8:30, we do not have an alert because the current trend of the market is up. So you do not have an alert at 8:30 when the New York session opens up. Let's go over to this candle here, which is 9:30, and you get a sell alert. You can see this candle pushed up for a retracement in the sell, then came back down because price could not get above this resistance. Came back down, you got a sell alert from red tape trading system, and you sold down. And then you found a support area. Now, the difference that you see between this 30-minute chart and a 5-minute chart is you can see that for majority of the day, pre-market New York, London, at 7:30 a.m., we got a buy signal and we just pushed up all day. So that means that basically this whole day, which is Friday, this day that this video is dropping, the market was just in an uptrend and they got a slight pullback. That's it. That's all. People will think that they have to scalp. You do not have to scalp to be a good trader. And I might add that if you go to a higher time frame like the 30-minute or the hourly time frame, my favorite is the 2 hour according with the 4 hour, that when you slow the market down and you don't see as many candles, it makes trading a whole lot easier. Think about it. The market is going to move. It finds a trend and it follows that trend for however long it lasts. Most times, these trends will last about 30 minutes to an hour plus. So let's go on over to the hourly chart. Since I like to trade the 2 hour, we'll go to the hourly. Now look at the difference in this chart compared to the 30-minute time frame. At 9 o'clock here, which is a new 4 hour candle, you get a sell down and we move down for roughly around, probably I would say about 45 minutes or so. And then as price comes back down, It finds that support here, which was support here as well. That's a double bottom on support. You push up, come back into it, and get a buy back up. Because remember what I said. This day was an uptrending day. So the market just trended up all day long and had slight pullbacks here and there. Now think about it. If you seen less candles while you were trading, you would panic less in your trades. You see a lot of different candles going up and down, and you say, oh man, the market is switching trend. Is it technically switching trend, or is it a pullback and not a reversal in the market? That makes a big deal of how many trades people take in a day. If you're aiming to only take good setups for one, and then as few setups as possible for two, why not go up to a higher time frame that is still going to show you the same exact movements that the lower time frame is going to show you, but with less candles and better structure? And also, you don't give yourself anxiety looking at these candles. Think about that. Me, I traded the lower time frames. It was too jittery for me. 1 minute the market was trending up, and then the next minute it seemed like the market was trending down. And then when you go to the higher time frames, you say, oh man, the market trended up for 2 or 3 or 4 hours. Or if you trade overnight, the market sometimes, as you can see, this is 1 hour, and you didn't get a pullback into 2 hours later, which ultimately hit support and broke out. So this trade lasted 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, about 19 to 20 hours. Think about that. So instead of taking 15 or 20 or 30 trades in this one day, if you caught this trade from this 4 hour support here and just held it, you could have been in a trade for 19 hours with one trade, maybe two, if when it pulled back here you got out and took profit and then re-entered when structure continued up. That is amazing. Instead of taking all these different trades, risking capital, you put on one, maybe two good trades with the same amount of risk each time and took a lot less trades and not jeopardize losing capital in the market because you took 20 or 30 trades. Big investors, bank, hedge funds, and so on, they do not place a million trades unless they have day traders who work for their firm that day trade and they scalp. There's nothing wrong with being a scalper if you can master the skill, but you can still scalp or intraday trade on a higher time frame. Like I said, I like to trade on the 2 hour time frame, which is this chart here, and you can see that I have a lot less candles. I get a lot less alerts from my system, and these trades play out for a lot longer time without all the noise of the lower time frame candles and back and forth. So I want you to think about that. If you're willing to discuss it, join my Discord, Red Tape Trading. I would love to hear from you. Please like the channel, subscribe to the channel, and I'll see you soon.